Well, hello, everybody. Steven Sitkowski here. Once again, welcome to this week's edition of Market Insights. Hope you had a fantastic weekend. I went and saw a play that I've seen before called Beauty and the Beast. Absolutely phenomenal. Just great. You know, all the songs that we know and characters that we know, and such a pretty story. That was a whole lot of fun. If you get a chance, go see it. Do it. All right. Quick disclosure, a reminder that everything we do here is for educational and informational purposes only. It's not intended as investment advice. So what's moving the markets? All eyes are on the Fed. So on the 18th, we're talking 2 days, we get the interest rate announcement, which I think is pretty much a foregone conclusion. NVIDIA is now in correction territory, interestingly. Didn't have a big move to the downside today, but it is off a total of 10% from its all-time high, which for me means watch it as soon as it starts to rebound, add to my position. Bitcoin, man, 107. Can't even tell you that I understand Bitcoin, but I understand $107,000. So there is a trust that owns Bitcoin that I'm invested in. G like George, B like boy, T like Tom, C like Charlie. So if you don't want to set up a separate account just for Bitcoin, that's another way of participating. 10-year Treasury, pretty stable. It's inched up a little higher over the last couple of weeks at 4.4%. And oil's just not doing anything, seems to be stuck between 68 and 71. Right now, we're getting near that 71 mark. What to watch this week? Today, we had the Empire State Manufacturing Survey come out. The services PMI and the manufacturing PMI. So manufacturing disappointed, services had a beat. Tomorrow, retail sales will be announced. On Wednesday, that's when we get the interest rate announcement. Thursday, initial jobless claims forecasted at 230,000 plus the second revision on our GDP number. We'll see how that goes. Friday, one of the Fed's favorite indicators, PCE, personal consumption expenditure, expected to come in at 2.5% year over year, and core PCE at 2.9%. Here's last week's heat map. Look at NVIDIA, down about 5%, Oracle 10, Adobe 15, and then on the other side, Broadcom, which had an earnings beat, way up. Google way up. Alphabet technically. Tesla, great week, but a whole lot of red out there. Now for the year, it is NVIDIA by a mile, up 173%. But I remember when it was up more than 200%. And I remember when Tesla wasn't doing a whole bunch. That was before Trump was elected. Now it's doing a whole bunch, up 84% year over year. Walmart up 87%, Costco 60%, Meta 87. There's been a whole lot of money to have been made last 12 months. Market breadth, we like to look at the number of companies hitting new 52-week highs versus lows. So the New York Stock Exchange is 237 hitting highs, 141 hitting lows. Pretty solid. On the NASDAQ, 497 hitting new highs, 359 hitting new lows. This year's winners, Palantir, up 343%, Vistra 276, NVIDIA 171, followed by Axon, United Airlines Holdings, Targa Resources, Howmet, Constellation Energy. They're opening 3 Mile Island. That ought to go well. Fingers crossed, Broadcom and GoDaddy. Percentage of stocks that are outperforming the S&P this year, 31%, roughly the same as last year. So the participation is still not fantastic, and it hasn't been for a couple of years. Here is the Magnificent Seven. So NVIDIA was the number one performer, followed by Meta, Tesla, Amazon. They were going to kick Tesla out. Alphabet, Apple. So they all overperformed the underperformer, Microsoft, but it was still up 20% for the year. Earnings are continued to forecast higher. Good news for the stock market. So lower interest rates, higher earnings, we're likely to go higher. Investors, look at this, are dumping bonds like never before. I don't invest in bonds. I'm not going to roll out of bed for 4%. So, yeah, good for them. Hopefully that money went into equities. The fear and greed index is now slightly into the greed. Last week, we were neutral. So we got a little more optimistic. And in terms of Fed rate cuts, so there is now a 98.2% probability that we get a cut, 25 basis points. And then we're looking out to March. There's about a 50% chance that we get another 25 basis point cut. And then we're expecting one more in the next year. So we're looking at 3 more rate cuts. We've already had 2, so it gives a total of 5. We look at sector returns. S&P 500 for the last 12 months is up almost 29%. The big winner on the sectors, communication, by 10 points. And they're up 50%, technology 40, consumer discretionary 38, financials 32. Then everything else is an underperformer to the S&P, with materials, healthcare, and energy, along with REITs, just being awful in comparison, underperforming the market by 20%. Let's take a look at the charts, see what they've got to say. Look at the SPX, which is a proxy for the S&P 500. That is a thing of beauty. Look at the yellow line. That is the 50-day moving average. Sloping upward, that's bullish. Trading above that line, also bullish. Everything looks great. How about the Qs? Fantastic, at all-time highs. What about the squirrely one? Russell 2000, IWM. So it has started to roll over. Let's go ahead and double top right here, but it's kind of held its position above that 50-day. And as long as it does, we would be more bullish. So the charts aggregately, they just look great. Everything is kind of according to schedule. I wanted to share with you on our trade ideas of the week that go out to Inner Circle members. This is how we've done this year. We've closed 103 trades. If you look at the winners and the losers, put them all together, our average return per trade was 17.8%. That's not for the year. That is with an average hold of 16.6 days. So we have averaged a little better this year than 1% a day. It is something we are very proud of. All right. Well, hey, great being with you again. Next week on Tuesday, that's the day before Christmas, isn't it? Yeah, I doubt you're going to see me for the next 2, next Monday. I don't know. We'll see. It depends on what else I've got going. Even I would like a little bit of a break around the holidays. So we'll play that one by ear. Let's just put it this way. I'll be seeing you soon. How's that? All right. Awesome. Hope you're all doing well. Stay safe. Bye for